Hey everyone, I wanted to update you all on my buy recommendation for Upstart stock. The company reported a quarterly earnings update on May 7th, and I haven't had a chance to get around to this company given all of the other companies I've been following in this earnings season. So, I've had a chance to go through their latest figures and their latest strategic changes, look at their valuation and the prospects going forward. And I'm going to update my buy recommendation for Upstart stock. And I'll share with you the numbers that I'm incorporating, the recent quarterly earnings release, and what I think about those numbers, and why I'm making the recommendation I'm making. So let's get into the figures.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Upstart management saying that they anticipate a return to sequential growth in the second half of this year and positive EBITDA by the end of the year, even in the current credit environment. So, if you don't already know, Upstart uses artificial intelligence to make lending decisions. Their model is yet unproven, and that's the big risk I've been talking about for several years now with Upstart stock. Because they haven't gone through economic cycles, meaning the ups and downs of our economy, investors, lenders on the platform don't quite know how effective its artificial intelligence lending decisions are going to be, right? When the economy is going well, as it has been, right? Unemployment is below or roughly around 4% in the US. Those are record lows. People have jobs, and when people have jobs, they usually make their loan payments. When these lending models really show their worth is during economic recessions, when people are losing their jobs. We find out how many people have taken on too much debt and how many people are living beyond their means. As the numbers start to go up in terms of credit defaults, it really starts to show up with these models and these lenders. So that's what we've been waiting for Upstart. We've been waiting to get the data as credit defaults have started to increase now in the first quarter of 2024. We've noticed credit defaults increasing across the board, whether it's car loans, personal loans, mortgage loans, etc. The default rates are going back up. For several years, they had been at record lows because consumers, their balance sheets were lifted significantly higher during the pandemic because of all of the stimulus that went into the economy. Now, with several quarters and years away from the most recent stimulus package for consumers, their balance sheets are starting to worsen. And this is where we're going to start to see the data worsen in terms of lenders. But Upstart suggesting that it's going to do okay. Now, the company saying in the latest quarter that total revenue at 128 million was an increase of 24% from the same quarter last year, but it was still down 9% from the previous quarter. Now, part of this increase could have been due to other lenders pulling back. I've noticed other lenders, and you've probably watched my videos on Sofi stock, and I've talked about how Sofi stock and their management team has proactively reduced lending this year. Coming into the year, they said we're going to make fewer loans because we anticipate consumers' balance sheet, consumer income, consumer disposable income all getting worse in 2024. And we don't want to be lending into that environment. So we want to reduce how much we're lending. And that's been a similar story with many lenders, bigger banks as well, bigger lenders as well. And that gap maybe created an opportunity for Upstart to take some market share. Now, they made 119,000 loans totaling $1.1 billion across their platform in Q1. That was up 13% from the same quarter last year. More interestingly, conversion rate jumped to 14%, up from 8% in the same quarter the prior year. Now, conversion rate measures how many loan requests were fulfilled, right? And throughout history, I don't think there was ever a shortage of people looking to borrow money. I think if you're looking for somebody to lend money to, you will find plenty of people that are willing to borrow money. There is no shortage of people on this planet that are looking to borrow money. The question remains, are they people that you want to lend money to? Are they people that you're willing to risk your capital lending to? That's the bigger question. And so that's the harder part of the lending business, is finding qualified applicants to lend to, not just any applicants. And the interesting thing was they converted 14% up from 8%. And it's not like lenders were more eager to make loans in the first quarter of 24 versus first quarter of 23. I think what happened was Upstart attracted more qualified applicants in the latest quarter. I think it is true what I was speculating at the beginning of the video, that perhaps the bigger lenders pulling back created an opportunity for Upstart, as people who felt like they should be qualified for a loan, maybe they got turned away from Bank of America, JP Morgan, Sofi, Wells Fargo, and others, and they came to Upstart thinking that they had better chances, and they probably did, and they were able to convert on their loan requests. So interesting developments here for Upstart. Now, net income in the quarter, or I should say net loss in the quarter, improved to 64.6 million. That was better than the 129 million they lost in the same quarter the prior year. Now, at the peak of the pandemic, when consumer incomes were much better and their balance sheets were better and lending on the platform was much more robust, Upstart was able to deliver several quarters of positive net income. So they've proved that their business model can be profitable at a certain scale. Okay, that part of the business they've proved. The other part of the business they have not yet proved. And that's the bigger question for me. And that is, how effective are their lending models, their artificial intelligence lending models? How will they perform during a down cycle in the economy? How will they perform when unemployment increases? How will they perform when people start defaulting on their loans at a larger rate than usual? That's the big question. And really, we won't get an answer to that until there is a recession, until there is an increase in unemployment. So until that point, there's a big question mark surrounding Upstart stock, and only time will tell, right? There isn't anything that Upstart can do to fast forward that process. But in the meantime, they can work to improve the business. They can do other things that can improve the business and get themselves in a good position to perform well during those downturns. And one thing they did do, I want to discuss here. So they launched a customer personalization network here. And with this capability, lenders can identify when one of their existing customers is shopping for a loan, offering an opportunity for that lender to expand their relationship by making a compelling offer of credit. So this is for banks and credit unions that notice one of their own customers is shopping on Upstart for a loan instead of coming to them first. And this personalization offer allows those lenders to find those existing customers on Upstart and reach out to them there and connect with them there on the Upstart platform and give them an offer for a loan. So it's a way for existing lenders with existing customers to retain those customers and extend their relationship and deepen those relationships with existing customers. So there's an ability for these nationwide lenders to choose between Upstart's AI-enabled credit model or to choose their own credit model. So in these cases, those lenders, they don't have to go with the Upstart lending model, the AI lending model. They could go with their own proven lending model that they have decades of history with. So this gives them the choice. And I think more often than not, they're going to choose their own model. And this gives them the flexibility to find customers and use their own model, which will make them feel more comfortable extending credit. Not only do they know the customer, but they also know the lending model. And those two factors will make them more willing to make those loans. And so that's going to, in my opinion, increase the activity, the engagement on Upstart's platform. And right now they're just starting with personal loans, but they plan to expand into auto loans and HELOC loans, home equity lines of credit, in the future. I think this is a good move, and I think this can be a good catalyst for Upstart longer term. Now, Upstart is trading at a forward price to sales of 3.014. It's been fluctuating around this valuation since about January of 2023. It's had moments on upside and then it's come back down here. And so I last updated Upstart, I should say. I always confuse Upwork and Upstart. I last updated Upstart stock on April 12th, and I told investors the stock is not a buy. And still, even after these results, I still don't believe Upstart stock is a buy. I would still recommend it as a hold or market perform. There's still too much risks associated with the stock to comfortably recommend buying at current valuations. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.